Welcome to the Dental Team Podcast. I'm your host, Kiera Dent, and I have this crazy idea that maybe I could combine a doctor and a team member's perspective because let's face it, dentistry can be a challenging profession with those two perspectives. I've been a dental assistant, treatment coordinator, scheduler, biller, office manager, regional manager, practice owner, and I have a team of traveling consultants where we have traveled to over 165 different offices coaching teams. Yep, we don't just understand you, we are you. Our mission is to positively impact the world of dental, and I believe that this podcast is the greatest way I can help elevate teams, grow VIP experiences, reduce stress, and create A-teams. Welcome to the Dental Team Podcast. Hello, Dental Team listeners. This is Kiera, and you guys, I am really excited to bring on one of my favorite guests. Him and I giggle every time. And it's funny that we have such a fun relationship because he's all things tax and finances, and I'm all things let's play and have a good time. So I am jazzed to bring on Art Wiederman. He works with Eide. I've been on his podcast several times. He's been on our podcast. He just got back from Maui. So Art, how are you today?
Well, I'm wonderful, Kiera, and thank you for having me on your podcast. And I'm kind of thinking I want to come over to your side, the more fun side, a lot more fun than tax and accounting side. I mean, that's where I'm heading. So we'll keep talking. You'll get me over.
I felt good about that. But Art, every time I talk to you, I giggle. Last time it was because you said you're friends with Teddy Roosevelt, and that just makes me giggle because you're not that old, but it makes me giggle. And then this time, so on Art's podcast, Art, tell them your podcast. So if you guys want to get more Art in your life, go check out his podcast. Art, what's your podcast?
Thank you, Kiera. My podcast is called The Art of Dental Finance and Management with Art Wiederman, CPA.
I love it. It's a fun podcast, guys. And when I was on his podcast the other day, we were talking because I bought a Tesla and he wanted to talk about this. And Art made the comment of, Kiera, you'd be embarrassed to ride with me because I never buy cars. Well, with that conversation, Art just told me he was in Maui. We were talking about how we should buy real estate there. And I said, Art, you should be able to afford real estate in Maui. You don't even buy cars. So,
well, wait till you go look at what real estate costs in Maui, Kiera. But gas is cheaper in Maui than it is in California.
How is this possible? Gosh. Let's talk about that real fast because in Reno, gas right now is $5.09 a gallon. What are you guys paying in LA area?
Well, it's anywhere between, and it depends on what grade you buy.
Sure.
But in my neighborhood, it's $6 to $6.50. In Maui, it was in the mid fives.
Wow.
It's crazy. I mean, it takes $125 to fill up my tank. It's just crazy.
It's insane. I honestly sometimes feel like I'm going to get jumped getting into my Tesla. I don't blame people. The Tesla was not meant to be a gas saving vehicle. It was just supposed to be a fun, fast car. And I'm very thankful we bought a Tesla. So those are all things. Art and I could talk all day about Maui, about cars, but Art, let's talk about Tax day, April 15th. If you guys don't have tax day on your calendar, that means you've never probably had to pay a high tax bill. If you know April 15th is like a day on your calendar forever, it's probably because you've had to pay a high tax bill. I've definitely been the recipient of that high tax bill and that surprise. And Art, I love Eide Bailey. I am a huge fan of you, Scott Haberman, the whole crew there. I really love what you guys do. So let's talk. If somebody listening has received a surprise bill on tax day, gosh, I hate taxes so much. I cry every year. I mean, I keep scooching my conversations
out of both eyes, right? Both eyes. There's
both eyes, full ugly cry over here.
It's like a Maui waterfall.
That really is me. But and it's not because I don't want to pay taxes. It's just I do not like the surprise element of taxes. And I really hate, and I'm going to speak on behalf of a lot of listeners right now. So Art, this is lovely being said to you. I'm sure you've heard it. I really hate when my CPA comes to me and says, but Kiera, you made more money this year. So that's why you have a higher tax bill. You should be happy. And I'm like, so here's the scoop. I'm not upset that I have to pay a tax bill. I'm upset by the surprise that I didn't know I was going to need to pay this because of what we'd estimated. So Art, let's kind of dive into what do you do if you get that surprise? Just take it away, whatever angle you want to go. Because this is your world, the taxes and finance, and you're going to make more smiling people at the end of this podcast.
I'm going to try. So let me tell you what, Kiera, a CPA in my mind, and I've been doing this for over 40 years, has two responsibilities. Number one, to save you legally, use the tax laws to your advantage as much as possible, because the government will tell you, you are not obligated to pay one dime more than what the tax law obligates you to pay. And the second thing is that if you have to pay taxes, that you have 6 or 9 months of notice. I mean, we get new clients. Oh my God, Art, I had to pay $75,000 and my CPA called me on the 14th of April. Well,
I would die, or I would just fall over and die. It wouldn't even waterfall tears. It would just be death. I'd be so terrified.
No, it would be. And so the way I've run my practice for years and years and years, and Scott does the same thing, and Don Watson and Pam Chamberlain in my office do the same thing, is right after the September, October deadlines, we get on the phone and we literally call every single client. We send out emails and we call and we say, okay, your tax planning meeting is this and this date. But it's more than that, Kiera. We need to start at the beginning of the year. So, if let's say you're an S corporation, right? January, we're going to talk to you and we're going to say, okay, let's set up your salary for this year. Mm-hmm. And what do you think you're going to do, Doc? You're going to do more, you do less? Well, I just hired the dental A team, and oh my gosh, we're up 20%. We're going up 30%. I can't even count that high, right? And so now I'm going to make more money. Okay, so let's raise your withholding, or let's talk about some other things, which we'll get to in a second. So we do that in January. Then maybe take a look at us, where we are in June, July. How are we doing? Are we on track? Are you making more money? Did something happen? Did you lose a main team member? How did that work? And then in November, December, we're going to get on the phone and we're going to do a very thorough, detailed tax projection, so that November 15th to December 31, whenever we meet with you, we're going to be able to say, okay, Dr. Dent, here's the deal. You made more money this year, but now you've got 6 months of notice, and now we can do some things, right? There are some things we can do to mitigate this, mm-hmm. right? So maybe I'll go into some. So that's the big thing, is if you guys, anybody got a surprise, to me, that's on the CPA. It's a bit on the client, because they need to be checking in, but they should be getting a call every year, 2 or 3, at least 2 times, if not 3, to figure out where they're at. Now, so let's say, Kiera, we get down to November and we think, we're up. Oh, I know I've got more money in my bank account, and there's no more government programs to give me money. So that means I must have earned it because of, all the things that Kiera taught us and her team and all that stuff. So a couple of things we can do. Number one is equipment purchases. Now, Kiera, you and I are both believers of having the best technology and the newest toys, not just to buy toys, but to have them because they're marketing tools in our office. Mm-hmm. I mean, if you don't have digital x-ray, that's crazy. So digital x-ray.
Some offices still have paper charts. I think that's equally as crazy. Guys, if you don't have digital x-rays and you're on paper charts, call me. I'll just do you a favor. Like, I'll help you out. Like, I won't even charge you. I'll just save your life. Like, don't do it.
Yeah. Digital, I mean, and digital scanners. I mean, mm-hmm. I just had a crown done, and you get to sit there and watch the doctor maneuver the thing around, and it's amazing. A digital scanner is $30,000. CAD CAM, CBCTs are huge. If you're doing full arches and full mouth reconstructions and things like that. It's so. All of that, and there's what's called 100% bonus depreciation, Kiera, which means that if you buy it, you get to write it off in the year you purchase it.
Yes.
Now, the one thing I will tell your listeners is, if you're going to do that, okay, here's the one question they need to ask if they're an S corporation. So all you have to ask, doctors, and write this down: do I have enough S corporation basis to write off a purchase of $100,000 piece of equipment? That's all you need to ask. And if they say, what does that mean? We need to make a pitching change or something. But anyway, so equipment purchases are one thing, okay? Building out a new office. I mean, there are doctors that are busting at the seams. And I mean, Kiera, I know you've helped a lot of doctors get into new offices where they're just busting. And I mean, when they do that, what does it do? I mean, doesn't it like help you go crazy?
Yeah.
As far as your production and everything?
100%. Yes.
Yeah. So a new office. I mean, there's huge tax write-offs, cost segregation studies. where you can write off, instead of over 39 years, some of the real estate, we can take it in the current year. And then the last thing, Kiera, that maybe we should just chat about is qualified retirement plans. And I am a big proponent of planning for retirement. Doctors, you guys work really, really hard. I don't know any profession of the professions that work as hard as the dentists that I've worked with for 40 years. And unfortunately, it's a physically demanding job and profession. And we're talking fingers, hands, neck, shoulder, back, arms, the whole thing. And gosh, wouldn't it be nice that, one day you wake up and you say, I want to retire and I've got the money to retire. A qualified retirement plan will help you to do that. And I would say maximize that every single year. And I'll go through them real quick. If you're starting and you don't have anything and you have up to $40,000 a year to give out to pay into retirement, do what's called a simple IRA, SIMPLE. Make sure that your spouse is on your payroll. That can get you up to, 30, 35,000 for you and your spouse, and very little for your team members. There's no administration. That's a beginner's. That's what I call baby bear plan. Okay. Mm-hmm. Then we go to the mama bear plan, which is what most of your clients probably have, Kiera, which is called a qualified profit sharing and 401k plan, which would allow, again, if you put your spouse on the payroll, that you can put in close to $60,000 for yourself, an extra $6,500 for your employees. It's extra $6,500 if you're over the age of 50, and then you can put your spouse on. You can put in up to 85,000 for you and your spouse, and then maybe 10 or 15 for your employees. And that's if you have up to $100,000 to put away. Mm-hmm. That has to be set up by the end of the year. The simple IRA has to be set up before, I believe it's October 1, because you have to give notice to your employees. And if you are a doctor who's getting towards retirement, you're really killing it in your practice, or even if you're not, even you're over 35 or 40, a cash balance defined benefit pension plan, you can put away hundreds of thousands of dollars tax deductible. So Kiera, here's the deal with the retirement plan. Number one, the contributions are tax deductible. So if you live in my state, okay, the maximum federal bracket is 37%. The maximum state bracket in California, if you make over $1 million, which is probably not most of the folks listening, but it can go from anywhere from 9 to 13%. You could be in almost a 50% bracket. Mm-hmm. So the government's paying for half of this, right? And then when you put the money in and you invest it, all the interest and dividends and gains on investments, if your investment advisor is trading, are tax deferred. So the amount of money, the amount of wealth that you can build with a retirement plan is frightening. And then the last thing I want to touch on, because, again, you and I could talk for days about all this stuff, right? is putting your children on the payroll. Okay. The government changed the rules so that now a child can make, I think for 2022, it's $12,750. I don't have the exact number in front of me, but it's just under $13,000 without having to pay any federal income tax or having to pay any without paying any federal income tax. There might be a small amount of state tax, and there's Social Security taxes, which can be waived in certain instances, not very many. But you put your child on the payroll, and these young kids today, the reason I had children, Kiera, was for them to teach me how the internet works. That's why I had them, no other reason. And they do your social media. They can help you with your marketing, help you with your website, help you with, all kinds of stuff. And so you do that, and then it's tax deductible to the practice. So you get the write-off at 40, 50%. And then maybe, you have to pay Social Security tax. So that might be 15%. But it's a huge tax savings. Mm-hmm. So those are some of the things. If you get a big surprise, these are things that you need to be talking to your CPA about, and they should be talking to you about it. So
I agree. And that's something that I really love about Eide Bailly. Everybody who listens to the podcast for any length of time knows that taxes are I feel they're part of our success tax. I think I'm happy to pay my taxes. I'm not happy to pay more tax than is necessary. And I personally like to feel as if I know the rules of the game better so I can play the game more strategically. So I think a lot of the things you mentioned were pieces I didn't realize. And I really do love that you said to be talking to your CPA to find out what your tax is earlier on. This year, I finally got smart, Art. We'll see if I have the big alligator tears. I realized that there were a lot of things like my retirement, my taxes. I've been saving for taxes, charitable contributions. For me, I realized at the end of the year, it wasn't just my tax bill that was hitting me, but it was all those additional pieces that I hadn't planned for. The charitable contributions, the SEP IRA, which I currently have, which, if that was for you for a 401k or those types of contributions. So not only do you have your tax bill, but you have those additional ones that need to get paid and put in there before tax day comes. And that can really stack up hefty bills. That's where I realized ooh, my CPA has been helping me get my taxes, but maybe not my charitable contributions, plus my 401ks. Those are all dollars that this year I set up. I have a very intense spreadsheet with my CPA. I'm sure they think I'm crazy and off my rocker, but for me, it's helped me. And I literally have bank account buckets, guys, where it says, this is my tax amount. This is my charitable contribution amount. This is my 401k amount. And I'm just putting that money in or investing it or whatever works for you with your CPA. That way, at the end of the year, I am not surprised with these big bills. So I think it's important for me. I scooched that really in-depth one up to July this last year. I was like, I'm sick of this November, December, because then I don't even want to celebrate the holidays. I'm depressed out of my mind. I want to not go shopping. I'm like, I feel broke. So I decided I'll scooch this up. So I had 7 months of tears this last year instead of just 2. So I don't know which way was better, but I'm super curious, Art. Is there anything, so let's say we're doing this. Like my CPA told me, and I'm curious on yours, and I don't know the right answer to this. That's why I'm asking. Is there ever a point where it is just what it is, and this is what you pay? Or are there always ways that you could leverage your money, utilize it in different ways? Because again, I'm fine to pay taxes. I just don't want to pay more than I need to. And I would rather know other investment opportunities or ways that I could get money off of my books to invest in other things that I care more about, such as nonprofits or real estate or investing in my community. So is there ever a time when it is what it is, or is there always a way that you can reduce
you're
that
always
tax bill?
wanting to be, great question, Kiera. You always want to be talking about it. You want to, we have a saying that pigs get fat and hogs get slaughtered. So you don't want to do anything that's too illegal. There are 40 or so investments that are on the IRS's bad list that you have to be very careful to either not invest in, or you better be sure that you're ready to take risk. But no, we're always talking. We can always look at, do you want to do a 1031 exchange of a piece of property? You've got a piece of property that maybe is not generating as much cash flow as you would like. And you're saying, well, gee, Art, if I sell it, I have to pay tax again. Well, no, you don't necessarily. You can do a 1031 exchange, and they're talking about dialing that back. Charitable contributions. So, Kiera, the stock market has run up in the past couple years. If you go back to 2008 when we had the big crash, the Dow Jones Industrial Average was about 7,500, and now we're at 35, 36,000. And so, if you own Apple or Facebook or Amazon or any of those stocks, Tesla, and you've got a big profit, don't sell the stock, donate it to charity, and then you get the full write-off. If you sell the stock, then you have to pay the tax, and then you have the net money to donate. So you always want to, if you have appreciated securities that you've owned for more than 1 year, it's got to be more than 1 year, you want to make a donation, donate those, then you don't have to pay the capital gains tax and things like that. And there are things called charitable remainder trusts for people in their 50s, 60s, and 70s who have appreciated real estate. And if they sell it, they would get killed in taxes. So there's all kinds of things. So we're always, to answer your question, we're always talking. There's never a point where I'm going to stop talking. You may You know that. So I mean, you do the retirement. We've bought all the equipment we can buy. The kids are on the payroll. We're looking at charity. And again, remember, Kiera, charity is a very personal thing.
Mm-hmm.
I don't ever talk and say, well, you're not giving enough to charity. I would never do that because it's a very personal, spiritual thing of giving to your favorite charity. So, but no, we're always talking. There's always something going on. There's always a new law. There's always a new this, a new that. So we're always talking.
Hey, Dental A Team listeners. I know that you are people who execute. I know it. You're the people who take massive action, get massive results. So I want to remind you that this is the last week, your last chance to join Dental A Team's virtual team summit, April 22nd through 23rd. That's right, guys. Last chance. Last year, people said it was the most epic event. The full team was trained. They had momentum. Guys, literally, the Dental A Team will be in your practice training your team for literally less than 1% of what we charge our normal clients. So get your tickets, guys. Head on over to thedentalatteam.com. Be sure to join us all day Friday, April 22nd for full team. April 23rd is for mostly doctors and office managers with a focus on leadership. I can't wait to see you guys there. Join us. Last chance. Don't miss out. You would hate to regret it when you see all those Instagram photos having that FOMO, because that's how I am. So I will see you guys April 22nd through 23rd. Head on over to thedentalatteam.com. It's the last chance. I'll see you then. I love that. And I think, as you were saying that, Art, as much as we invest our time into dentistry, and I hear all the time people are like, well, you can't become a master at that, so hire that out. I agree with both statements. I also think that if you want to turn taxes into, for me, I just find it fascinating to try to master and become a 1% better every single year. Like, let me get smarter on what I'm owing on my taxes. Let me get smarter on the rules of the game of taxes. Let me get smarter and talk to Art, listen to Art's podcast. These are things I actually don't find enjoyable. It's not like I'm going to be, let me go listen to a finance podcast. However, recently I've decided this is an area I'm very weak in. It's an area that I don't feel like I know as much in. So I think it's my personal obligation to become masterful in it, to learn as much as I can. That's why I have you on the podcast, Art. The podcast is fun because I get to talk to people I like to talk to and ask questions like this. So it sounds like if I were to action item this out, number one, if I got a tax bill surprise, I would have a meeting with my CPA like today, and let's plan for this year so we don't repeat what we did.
Right.
So moving forward, we're already well over a quarter into the year. So let's at least set something up for this year, ensuring that it's going to be smarter. We're more planned out for this year. I'm going to look at the pieces you listed off as far as if there is a higher bill. You mentioned something, and I just want to clarify. I thought most purchases, such as equipment, had to be purchased in the year before it closes on December 31st. But I know things like 401ks and SEP IRAs can be contributed to up until April 15th and still get it for the prior year. So how does that work on like expenses like equipment?
Okay, so let's start with equipment, Kiera. So equipment, now this is something that you've got to be very careful about. If your equipment rep calls you up on December 28th and says, oh, just make a down payment, we'll install the equipment in January, that will not work.
Okay.
Equipment has to be placed in service. When we have people opening new offices, we will literally time their what they place in service. So we might have somebody opening a 6-operatory office, and we'll say, okay, let's put 3 in service this year. Let's make sure we get the pictures of the equipment in service. Put your mother in the chair, clean her teeth, and there you go. And then the first week of January, we'll do the other 3. So it's got to be placed in service. It can't just be I made a deposit. But you can literally, if you're a partnership, an LLC, or a sole proprietor, as long as you have a debt that you're basically personally liable for. I mean, the debt rules could be 2 hours, but I'm just saying, you go to the bank, you borrow $100,000, you buy a machine. You're a sole proprietor, you're a partnership. You have basis in your partnership interest or your proprietorship. You could write it off in the year you purchase it, without paying a whole lot, as long as it's placed in service. If you're an S Corp, you have to have that S Corporation basis. For the retirement plan.
Can you explain what basis is? For anyone. I know it's like a hard thing, Art. I'm just going to ask because people are probably listening and like, I don't know what that means. Yeah, so I'm just going to ask the question. What is basis?
Okay. Basis is you start off when you're an S corporation, you form your S corp, you put 10,000 in, you get 10,000 of basis. You add to your basis by either investing more of your own money or earning money, having net profit in your practice. That's an increase. When you take distributions out of your S corp, that decreases your basis. So let's take the first year of a dentist, Kiera. Dr. Kiera Dent goes ahead and she starts an S corporation on January 1, 2022. She puts $10,000 into her bank account. She's now got 10,000 of basis.
Okay.
Her practice did $1 million. It netted 400,000. Okay. She took 150,000 of salary and she took out 250,000 of distributions. So all the money came out, right?
I was like, she got nothing. She's got that 10,000.
She got no basis. She got her 10,000 she put in. If Dr. Kiera Dent goes ahead instead and says, okay, I'm going to take my 150,000 of salary out, but I'm only going to take 50,000 and leave $200,000 in the bank. I don't need it. Then you've got the basis to do that. And then you can go buy that piece of equipment, not pay for it if you don't want to. And so that's why.
Can you buy more? So let's say I'm looking at equipment and it's 300,000, but I only have 200,000 basis. Can I buy that 300,000? I would think no.
Well, you can but you're not going to get the whole write-off. You might get the $200,000 write-off, but then the 100,000, you don't lose it. It just carries over until you ultimately have basis.
I see.
And the way you get basis when paying off debt is when you write a check for the loan principal amount. That's not a tax deduction, so there's no basis taken off.
That's always a sad day. And just like people can't I don't remember who I was talking to. I was talking to another tax person the other day, and they said people think that paying off their credit cards is a way to reduce their tax bill. And I giggled, and I'm like, no. You already got the benefit of what you paid on your credit card. You just now need to pay the debt. So it's the same thing. But there are so many rules.
And there are. That's why I have a job, right? So basically, at the end of the year, you need write-offs. I mean, you go down and you put a bunch of lab bills on your credit card. If you buy some supplies on credit, I mean, you can't go absolutely bat crazy. One thing, doctors, I would strongly urge you not to do is make sure you deposit all of your income. I mean, that is my my brain my head will explode. You get on the computer, it's going to explode. So we have doctors, well, I don't deposit the last 3 weeks of the year. Well, when you go through an IRS audit, doctors, it's a 2-day process. Day one is a receipt verification by the agent. They're going to look at everything. They're going to look at your bank statements. They're going to look at your production and collection reports from your computer. They're going to look at everything, and they're going to say, well, wait a minute, you didn't deposit there. So that needs to go back into this year, and you're going to pay penalties and interest. If you're going to be, for lack of a better term, aggressive in taking tax deductions, Kiera, and we can get into this because we don't have time, you want to do it on the expense side. I have fired 3 clients in my career who I found out were not depositing cash. And I just flat out said, I had one who said, I said, how much is it? And he said, well, it was $8,000 to $9,000 a month. I said, well, why did you do it? The answer was, because you would make me pay tax on it, Art.
You would. Hello, evil
McFly.
man.
Hello, McFly. There you go. So I won't do that. That is not something I will do. I have fired clients for that. But if you want to be aggressive on the expense side, we can have that conversation.
Sure. I think it's when I think about that, because I've had that, like there's technically the mailbox rule. So if things come through, you have a couple days grace, blah, blah, blah. But at the same time, let's have an abundance mindset. My mindset is I will always make more money the next year. And so if that's going to be the case, just deposit it. Get it in there. It's fine. It's already in your there. But I do agree. And that's something where in our company, we book a ton of our flights for the next year this year, because I know we're traveling. So airfare, I bought Staples gift cards. You can get, I don't know. I think they're changing the meal credits, but like you used to be able to buy gift cards for food. Don't go crazy on it, But
Right.
there's a lot of things I know in offices, like I know supply budgets get tanked and rocked in December because they're trying to get more supplies on hand. You know you're going to tank it. You're paying on taxes anyway. So if you can get more supplies in December and make the rest of year better. But again, you do kick the can down every year, every single year. And I know I'm going to have it every year where we'll just buy a bunch of plane tickets and rental cars and hotel rooms. That's just something we do.
About a couple things, Kiera. Right now for travel, I was just watching a news item on TV with all of everything going on in the world and the cost of fuel going up. Everybody is saying book your plane flights by May 1st or May 15th because summer is going to be very expensive. And then, doctors, if we have some doctors who are listening to your podcast who do place implants, I mean, at the end of the year, your implant companies are geared up and you want to buy 30 or 50 or 100 implants. Some of my periodontists have just gone crazy buying implants at the end of the year, but they use them in the next 3 to 6 months. And there's nothing wrong with that. Exactly. Nothing at all in my mind. So
I think that there's so many ways. Secretly, guys, I am getting on the tax bandwagon. I think it's just because I hate not feeling educated. I hate feeling like my CPA is giving me another rule of the game that I didn't know, which is totally fair. There's so many rules of taxes. It's crazy, Art. I'm thankful you have a job and I'm thankful you stay up on top of it so I don't have to as much. But Art, I also think it's a good idea, guys. I do interview new CPAs almost every year. I just want to see if my CPA is doing the best that they can. I don't think it hurts to talk to other CPAs. I love Eide Bailey. That's why, Art, I have you guys come on. You guys work with a ton of our clients. You guys are very dental focused. You work with a ton of dentists. And I think when you have a CPA who's niche in what industry you're in, they tend to know better write-offs and discounts and other things that they're seeing in other practices. So Art, if people want to get in touch with you guys, check out his podcast. But Art, if people want to touch base, just ask you some questions about maybe their CPA, see if Eide Bailey might be a better fit, how can they connect with you?
Thank you for that, Kiera. My office number is 657-279-3243. That's 657-279-3243. My email is A as in Apple and my last name, which is WIEDERMAN at Eide Bailey, which is spelled EIDEBAILLY.com. And for any of your listeners who are going to be at the National Academy of General Dentistry meeting in Orlando, end of July, I am doing a full day presentation there on half the day on financial planning. I'm going to talk about Art's golden rules and the 10 biggest financial mistakes dentists make. And we're also going to then talk about in the second half of the presentation, metrics and numbers and what percentage of your production should be in the 4,000 codes. So that's the other thing, Kiera, is the advantage of working with a dental CPA is I understand the difference between medial and distal. I understand what a 2950 is versus an 1110. I know what percentage you should have in cancellations. I don't do anywhere near what you do because you're golden, and that's why you're such a great resource to us. And I mean, Kiera is just a beast when it comes to consulting and coaching. It's just, that's all I can say.
We're a good peanut butter jelly, Art. You guys do the financial side. We grow the production side. It's a good peanut butter jelly sandwich right there.
That's exactly right. I love that. So, well, anyway, but yeah, that's what we do. And hopefully this is helpful information for your listeners. And thank you for everything you do for the dental profession and helping the doctors and through this pandemic was just unbelievable that we all got through it in one piece, but the dental profession got through this better than most professions, industries. I mean, I have friends who I have one of my best friends, his wife runs an event planning business. She was done. Zero, zilch, nothing. I mean, it was horrible. I mean, just, so.
It's amazing. And Art, as you were wrapping up, I just thought, team members, if you're listening to this, I hope you are. This is how you start to think like an owner. This is how you start to look at ways that you can benefit your practice. Office managers, like no taxes, look to see the ways that you could help your practice save. like there's so much in this that I wish I would have known as an office manager just to be a better support for my doctor, because most of the time office managers, you help get these things in place. So you might even contact Art and see if they're a good fit for your practice, because huge tax bills suck the life out of a practice.
Well, I want to say one more thing before we wrap up, Kiera. I want to tell, first of all, you thank you again for having me on your podcast. I want to remind you, doctors, you don't just fix people's teeth. You are about a better life, a better relationship, a better self-esteem. And when I help doctors transition out of their practices, which was one of the things that we do, I always say to them, doctor, you've been in practice for 37 years, and I want you to think about the thousands of people whose lives you changed for the better, and some of the lives you've saved, for example, sleep apnea treatment. I mean, things like that. So doctors, you are about the total health of people, and don't ever forget that. And not everybody is going to appreciate what you do, but most of your patients really appreciate what you do, and you have changed lives. And just remember that.
I love that, Art. With that, guys, we're going to wrap that up because that's such a magical statement. So, Art, super appreciate you. Appreciate Eide Bailey. All of you listeners, please execute. That's the best thing I can say is like make a better tomorrow by starting today. And Art, super appreciate you. Likewise, everything you guys do for our clients and for the dental industry. I'm just blessed to be a part of it and grateful to know people like you. So for all of you listening, thank you all for listening. And I'll catch you next time on the Dental 18 podcast. And that wraps it up for another episode of the Dental 18 podcast. Thank you so much for listening, and we'll talk to you next time.